Hello and welcome to another update video about the NASDAQ. So when we had the last video, when I made the last video about the NASDAQ on the 15th of July, we were around 11,900. Now we are at nearly 12.5. Last week, really, the NASDAQ was starting to pump. Yeah, it went up quite considerably. And we have to start thinking about the scenario more closely and more confidently that the low could be in here for the NASDAQ correction. I have in my S&P 500 video, I've said that I will make the breakout scenario now the primary expectation, and I do exactly the same now with the NASDAQ as well. So I've never believed that we will be in a 2 or 3 year long bear market. I've regularly communicated that. The only thing that I could imagine is going to happen is that we make here one more lower low, but I think that's it then. I think we are very, very close to the end of this, probably now year-long NASDAQ correction or stock market correction in general. Some stocks started to correct already years ago and basically preempted the development, but the NASDAQ did come down significantly and we might now have finally seen the low. It is not entirely clear yet. It is way too early to really be super confident about that, but we can carefully start to think about that. And I'm going to make the breakout scenario now the primary expectation. Now, again, this doesn't need to mean that we are going to go up from here for sure, and that it's going like 85% upside probability and 15% downside. No, it's more like 60-40 at the current stage. That is also the same for the S&P 500. And even if we come down once more lower and should break below the 11,075 level, which was here the swing low on the 17th of June or 16th of June, even if we make another lower low, I think we are very, very close to the end of the correction. I believe that there is a rally. I posted on Twitter, by the way, on the 18th of June that I'm expecting a rally, and that could be a bear market rally, it could be a bull market rally. We still don't know, but the NASDAQ, for example, made 14.4% since then, so it's not too bad. But this is not what I meant with a rally necessarily. I mean a really, really significant rally, one that we haven't seen in years, or one that we will probably one that we might never see again in our lifetime. Because I think the NASDAQ and a lot of the tech stocks or the stocks in general have corrected down that much that they are presenting opportunities that it's nearly unbelievable. Okay, while now a lot of people are selling, I believe it's exactly the opposite that people should be doing. But of course, this is not financial advice. I can't tell you what to do. But my own view, is that it's accumulation phase, for stocks, for crypto, and so on. So I am expecting a rally. What I can't tell you for sure is if this is already the beginning of the uptrend, or if this is just a corrective move up and we come down once more lower. Again, if we come down once more lower, I think it will only be one more dip. I mean, obviously every low or every move down consists of subwaves and so on, but we are not far away from bottoming out if we haven't done it already. Now, why do I suddenly make this my primary expectation? Because in the last video I told you I do expect another lower low. That is purely because we broke above this significant resistance level quite strongly, above the wave 1 high. When you go above the wave 1 high, or in this case, this move makes it more likely that we go up. Again, it's only a small shift in probabilities, but still, we can get a bit more confident. And the more resistance levels we take out, the higher the probability that we will not see lower lows again. Now, how can we count this from an Elliott wave point of view? Well, I've showed you in the last video that this here is probably a wave 1, then a wave 2 here, then with an ABC correction in the wave 2, an overshooting wave B, a massively overshooting wave B. But to be fair, there are various ways how that can be made to work from an Elliott wave point of view. This is the solution I chose. We came down in a wave 2, then another 1, 2, and we should now be in the wave 3 here in white. This seems to be playing out for now, and the question is now, I'm going to show you now what needs to happen to confirm this bullish scenario. So if we are in a wave 3, this is obviously an impulsive wave. We need to reach a certain price level ideally. That price level would be typically at least the 1.618 Fibonacci extension all the way up to the 200% extension. Can also be more without a problem, but this is sort of the area that we would expect. We haven't reached it yet. This target would be 12,860. The minimum, okay? And that would make sense because this is also a technical target. This is the previous swing high here from early June. So if we get there, I think we will not go through that in the first instance. I think we will get rejected there. And because the 1.618 extension is exactly at the level of this resistance, I think we're going to see here a rejection. That rejection will then be in a wave 4 correction. And then we would see a wave 5 to the upside. Afterwards, that could go all the way up to the 2.618 Fibonacci extension at 13,700. Now, it all depends on how high will the wave 3 go, okay? So that will sort of also move a little bit the wave 4 target and the wave 5 target. So if I put that on the chart now, so this is what needs to happen to make the bullish scenario work. Yeah, there are clear rules that actually, or at least guidelines that should work out. If they don't, it increases the likelihood of the bullish scenario not working out. We can also, just for fun, calculate the target for that fourth wave. That depends a little bit on how high that wave 3 will go. Let's assume we only go to the 1.618 extension. Then we are looking at a target here for wave 4 between the 38.2% Fibonacci retracement level and the 50% Fib level. Okay, so basically between 12,335 and 12,200 pretty much. Yeah, this is sort of where we would expect that wave 4 to go into. It could also go down to 12,000 without a problem. That would... No, it can't. 1 second. No, just gave you the wrong targets. No, we're looking here at an area between the 23.6% Fib level and the 38.2. So primarily between 12,530 and 12,330. Yeah, that's where I would expect it to land. The 23.6% Fib level is sort of the minimum a wave 4 needs to do, and the 38.2% is the ideal level. And yeah, as I said, it could go down here to the 50% retracement, but then we are actually cutting into wave 1 price range, so it can't get down to that level exactly. It can only go down to 12,220, the wave 1 high. If we go lower, then it would invalidate that wave count, and it might count as another 1, 2, okay, which would then be followed by wave 3. Now again, and then we would expect the wave 5 to go up. So we're looking at something like this, up first. Bear in mind, nothing moves in a straight line, and then up from there. And yeah, this is sort of the 2.618 extension. Now from up there, from the wave 5, all of this would then be usually corrected in a larger ABC correction. So ABC, yeah, coming down like that, and that might then take us into the current price range once more before we go up in a even higher impulse, even higher level impulse to the upside. So from that point of view, it's not looking too bad. There's a chance we reach that wave 3 area and will then not hold the wave 4 target area. And if we then go down lower and even take out the wave 2 low here at 11,500, then we are probably also going to drop below 11,075, and we'll see one more lower low in the NASDAQ, affecting stocks and shares as well, and probably other markets, yeah, just by correlations. So, and that's currently my view here of the NASDAQ. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out my second channel, More Crypto Online. Thanks a lot for watching. Bye bye.